also for the company, which is why probably the interest income would have possibly come down. We need to speak with the management on that.
Okay, Prayesh Jain also joins in from India Infoline. Prayesh, hi, good evening. Have you seen the numbers and your first reaction? What we believe is that refining has done much better than expectation. Petchem has defied the weakness, and oil and gas is slightly disappointing. What's your call?
Definitely, professionally, the numbers are better than what we were expecting, with GRMs coming in at $9.3 per barrel, and even Petchem EBIT has slightly better than what we were expecting. So operationally, the numbers look very good. Other income came in below our estimate, so it's, and the net profit overall came in line, exactly in line with what we were expecting. So operationally, definitely the numbers are very strong, and we would maintain our buy recommendation post this result.
All right. Well, Mukesh Ambani's statement is also here. I'll just read out the statement. FY 2013-14 was a satisfying year for Reliance. Refining business delivered the highest ever profits with sharp recovery in GRMs towards the end of the year. That is something that's being reflected in the numbers, of course. Petchem earnings grew sharply with margin expansion across polymers and downstream polyester products. So that's also reflected in the numbers. While we continue to face technical challenges in growing upstream production, the US shale gas business, that's the operative word right now for next year, the US shale gas business grew significantly during the year and has become a material contributor to our earnings. The retail business has turned around and is now India's largest retail chain. We have accelerated efforts to roll out our state-of-the-art 4G services across the country. So that's the statement coming in from Mukesh Ambani. Actually, let me just see if, what shale gas has done for the year. Shale gas revenues of $893 million, EBITDA of $659 million, that is 37% growth year on year is what we have. Mehul, a word on this shale gas revenue, 893 million, almost 900 million, almost approaching $1 billion actually now, and EBITDA of about 650 million.
Yeah, I think as we mentioned that, what would possibly have this 37% year-on-year growth that we just spoke about, possibly is also backed by the increase in prices that we just spoke about. So I think certainly, while it is growing significantly more, faster than what was expected, primarily driven by the higher gas prices, we need to speak with the management again on the volume front and on guidance in FY15 on the volume for shale gas before we revisit our numbers on shale gas for next year.
37.5 BCFE volumes for the last quarter, Mehul. They haven't given the guidance for the next year, but they have given the fourth quarter number, net sales volumes average of 37.5.
Yeah. So that is certainly stronger than our estimates. Both in terms of volume, it was slightly higher, I think about 3% if I remember correctly, higher than our estimate. And of course, price-wise, it has been stronger compared to your QOQ basis.
Prayesh, your call on the shale gas business?
Yeah, it's pretty strong numbers, and we are building in strong growth in volumes for the next couple of years as well. So, and this will be a good value driver for the stock. I think the E&P segment, the domestic has not been performing well. So I think that's creating an offsetting impact for the E&P business.
Piyush, what's your call? Looking at these numbers, what would be your reaction?
The first reaction should be on the GRMs. So GRMs is definitely slightly above our expectation. I think this should take the full year GRMs above 8.2, what we were expecting.
Okay.
So slightly above that. Second, Petchem is something in line with what we were thinking. So, and thirdly, oil and gas. I think shale volumes are in line with what we were expecting, but definitely the pricing, I think they have achieved better pricing.
All right, so you're seeing the shale gas revenues. I'll quickly read out the retail performance as well. Of course, this does not impact the standalone numbers, but because these are full year numbers as well. Reliance Retail revenue grew 34% to 14,500 crores and an EBITDA performance of 360 crores. So they did break even last quarter itself. For the year, they have done 14,500 crores revenue and 363 crores of profit before depreciation and tax. Prakash, anything on these numbers?
Yeah, as I said earlier, it's going to be difficult for the street to start ignoring or continue ignoring retail and shale gas when we look at the valuation for the stock. And as I said in the beginning of the show, Reliance this time around when it comes to earnings season has been poised slightly differently and interestingly. And why I say so is usually we've seen the stock has been either ignored or sideways or been out of action of sorts, and the numbers probably come make an impact for a day or two and then it's over. But this time around the stock has done much better than what it has done in the entire year. In the last month or so, it's moved to a very robust level where people would believe that if the numbers do not belie expectations largely, people are willing to buy into that stock because it's still under-owned on a retail basis as well and an institutional level, you would know. So very clearly these numbers go ahead, build much more confidence given the kind of headwinds which are positive from share, from retail and possibly the gas repricing. So I think overall it's a very decent set of numbers to look at and go into on Monday morning into trade with people really wanting to put this on the buy list with much more reassurance.
Prayesh, the stock has already rallied quite a bit. It's broken out of its trading range, now at 950, multi-year highs for the stock. Based on these numbers, do you think Monday morning it deserves a bit of a pop?
Definitely, it deserves a thumbs up on Monday morning, and overall, it's one of our top buys in the oil and gas space because we believe that the core business is what is scoring for Reliance over the next couple of years. You talk about their off-gas cracker or the petcoke gasification project, which these projects will almost double the EBITDA from the petchem and refining business by FY17. So you're talking about big jump in their standalone earnings in the next 3 years. So, and the main reason why the stock underperformed in the last 3 years was the earnings remained flat, and now you are seeing a good traction in earnings. So definitely it deserves a re-rating, and we believe that it's one of the top picks in the oil and gas space.
All right, Prayesh, we'll let you go on that note. Mehul, I wanted one more reconfirmation on your end. Interest income of 1446 crore is clearly down 400 crore quarter on quarter. You believe this is a bit of a one-off and as such should be read like that? As you said, there would have been a bit of an increase in capex as well.
Yeah, so over the next couple of years, they are investing almost $12 billion just in petchem plus refining expansion, and clearly that is going to draw down the cash balance that they have. While it will remain a cash positive company, no debt on a net basis on the company's book, but we do believe that as the cash generated is reutilized in capex and in expansion purpose, clearly there will be a reduction in the other income to some extent, which would be offset by increasing capacities coming in and the volume expansion as well as the EBITDA increase because of the new projects coming in.